Hi, this is Zak Mir from Master Investor with a look at some bulletin board hero stocks on Friday, the 15th of May. Starting off with Bowleven, where we've got the umpteenth attempt by the shares to break through the 200-day moving average. That's currently relying around the 31 pence level, and view is that if we can deliver a weekly close above that black line there, which has been falling for much of the past year, there could be at least an intermediate rally here towards the top of this rising trend channel from October, heading up to 38 pence. Stop loss on this argument at the moment, probably back below 29 pence, so the area of the 10-day average at the moment. But the push for the RSI through the 50 level, the neutral 50 level, and the spike in volume does suggest, or at least indicate, there could be a successful break this time, even though over recent months you can see that every time the shares have pushed through the 200-day line, they have then failed from that point. Capex is the next stock up. We've had the retracement here from this massive spike, which went through the 200-day moving average just around the turn of the month. Shares hit over 6 pence at best. Good news at the moment would appear to be that we've got 3 or 4 days of the shares consolidating at or just below the 10-day average at 4.14 pence. And while there's no end-of-day close back below this feature, one would be looking for a partial or even full retest of 6 pence plus over the next few sessions. Probably the trajectory here is even as high as 8 pence, which would be within this rising trend channel from the end of March. So 8 pence currently the best case scenario target, while we hold above, let's just say 3.5 or 4 pence. GCM is the next stock. GCM Resources. Here we've got the classic breakthrough the 50-day moving average, 11.04 pence. That's the blue line here. We had the failure at the beginning of March. I had that feature, so this time we look rather more encouraging. Massive spike in volume as well. That's the best it's been for about a year. So the idea here is that as long as the shares hold above the 50-day line on an end-of-day close basis, we could see further recovery. The favored destination at this point, probably the top of this notional channel here from December, rising trend channel, with its resistance line through 20 pence, just above the 200-day moving average, the key charting feature at 19 pence. The time frame on such a move may be the next 1 to 2 months or less. Greatland Gold, rising with the gold price itself. Over the last few sessions, what's encouraging here is that we finally got support points coming in at and above the 50-day average. That's at 0.13 pence here after the failure to sustain the 50-day line in April. The expectation here is that probably a target towards this sort of area, 0.25 plus, is on the cards, while we hold above the 50-day moving average on an end-of-day close basis. And that would also clear the 200-day average at 0.21, which has been pressuring the price action over the recent past. Teathers Financial stock, which seems to have captured the imagination of some private investors at the moment. The situation here is that we're back towards the floor of the range that's been in place since February, sort of 3 pence to 8 pence. The view now is that probably enough groundwork or basing has been done to deliver a fresh attempt at bouncing off the floor of the range. Support line there from February, and the overall sort of range or the price action within this channel here, 3 and 8 pence as well. If you're cautious on the shares, maybe wait on an end-of-day close back above the 50-day moving average at 4.41 pence. But risk reward at this point looks like it's attractive, and only back below, let's say, 3 pence on an end-of-day close or a weekly close basis would sort of snuff out this notional opportunity. Finishing off with Valirx here, another sort of spike through the 50-day average. Most of yesterday's price action above the 50-day line at 0.21 pence. So we're looking for a decent move to the upside while the 50-day line holds. Possible upside here, 0.35 pence, which would be the top of this rising trend channel from December, and really the 50-day average, the stop loss on the buy argument. Buy argument really backed by the way that 0.2 pence has been support for such an extended period, and the shares seem to be quite stable in that area. That's it from me. More updates on Twitter at Zak's Traders Cafe.